Good morning, everybody. Welcome to my channel, 1K Freedom. My name is Richard. I was about to go to the gym, but yada, 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 yada. So last night, I was going to start editing this video, and then I watched it, and then I realized, A, it was 22 minutes long, which is too freaking long. Secondly, I didn't enjoy looking at my mug, and this is not better. Actually, hair was better in that video. But I realized I went on a lot of tangents. Like, I think useful information, but just too much to take in at one time, if that makes any sense. And so today, I wanted to just keep it focused. In the last video, I talked about if you need to have cash to be able to invest. So that was about money management, very high level. I'm not a budget and saving stuff. Like, I can make videos if you want me to make videos on that, but I just gave like a high general overview. And so today I wanted to talk about, let's say you have money to invest now. Where does it go? And once again, I'm not a financial advisor, financial professional. I'm not qualified, not trained. This is just for entertainment. Just trying to be helpful. So if you look at this chart, and I forgot where I found it, and I'll make a note of where, if I can remember, it's showing risk versus reward and the types of investments along this risk reward line. And so at the top, you got like commodities, futures, options, those kinds of things, crypto. That's very risky, but possibly very high reward. On the low end, you got government bonds, CDs, low risk, but low reward. Right now, right, rates are high, and so you can get like 5% on a high yield savings account, which is pretty good. But which is definitely historically very good considering the last few years. However, if rates start to fall in the future, then those rates will fall also. On the high end with commodities, options, futures, stuff like that, super risky, but I think takes a lot of time to learn how to do that stuff. And I think for the average person, they don't want to put in all that time to learn this stuff, especially when even if you studied, forever, you can still get wiped out on just one black swan event, one bad event. Okay, so generally, people fall into the investing in the stock market. That's kind of where most people build their wealth, it seems like. The one thing that's missing from this chart is physical real estate. You see REITs, which is a real estate investment trust. I own a few shares in some of these. They usually give pretty good dividends. But the physical real estate is not on this chart. Okay. And so if you're a business person, okay, you might want to invest your money in your business. Got it. Okay. If you're a drug dealer, try reference, you probably want to buy more inventory so you can sell more inventory. Uh, you know, um, if you're super afraid, you'll hide your money in your apartment, your house, whatever, but then you're losing against inflation. For the average person, there's very few places to put your money. It just seems like it's just the stock market. Okay. And so, and if you're not good at picking stocks like me, you just put them in mutual funds or ETFs, you let somebody else handle it, or better yet, you just buy indexes. And I'll cover those topics in different days, okay? And also cover like time in the market versus timing the market. But put that all aside for now. So that's kind of it. It's a very short video to say the average person has very few options to create wealth for themselves over the long run, especially if you work a job and you're not entrepreneurial. The one other thing is you could invest in real estate. Now, it's a touchy subject in the sense that, yeah, lots of people have created a lot of personal wealth these last few years as housing has gone up, in value. But if they sell their place, they have to buy another place. Is it really an asset? I mean, it's all debatable, okay? But yeah, it's good to own a place, I imagine, right? For the right price, if you would know you want to live there for a long period of time or forever. But at the same time, you take on a liability, right? You take on a mortgage generally. And that mortgage is serviced by your ability to pay that debt, your job. And so if you lose your job, then that house is going to be lost, most likely. Now, hopefully you'll get out before getting foreclosed upon, but it's still, I imagine, very stressful. One thing you could do, right, is to buy a duplex or a fourplex or something like that. But now you've become a landlord, so there's pluses and minuses of that, right? I mean, for the least amount of effort within the range of possible investments for the normal person, it's probably going to be the stock market. It's probably going to be picking mutual funds, indexes, not picking individual stocks because that takes more time. And at the higher end, becoming a landlord, I imagine that takes a lot more time, a lot more effort, more headaches. You got to deal with people. And so that's something to consider. So that's it. That's all. I think this applies to like 90%, 80% of the people out there. For the other 20%, you probably are way smarter than me. You don't need to watch my YouTube channel. Anyway, thanks for watching. Do me a favor, subscribe, like it. Like it even if you didn't like it. uh, and I'll see you next